YouTube, hey, Casey Dimon here, TaxSaleAcademy.com. Listen, thank you so much for joining me on today's live stream, my first live Q&A about tax sale investing. All right, guys, here's how we're going to work this. First of all, I've got a list of questions that I've received, a few via email when I sent out the announcement about doing this live stream. And then, of course, I've got some from the past week or so. Now, some of the questions I'm going to answer, I've actually answered the people specifically. And, basically, I told them, so if you hear your name mentioned and you've already received the answer, I just wanted to let you know it's a great question. That's why I'm sharing it with everybody else that's going to watch this either live or the replay. A lot of people are working, that kind of stuff, want to know if they can catch this later on. So if you have to skip out early, by all means, feel free to come back later on. It will be posted here on the YouTube channel here on the Tax Sale Academy. Now, guys, if you have any questions whatsoever, please go ahead and post them in the box. In the meantime, I'm going to go ahead and get started with some questions that I've received recently, all right? So the first one is Mark via email. Mark's question is, he said, I recently bought 2 low-value tax sale properties, and I want to transfer them using a quitclaim deed. Where and how to get and submit these forms without utilizing an attorney since the property value is so low. All right, first off, I am not an attorney. I can't prepare it for you, and I can't give you legal advice or anything like that, okay? What I can tell you is that if you want to transfer property utilizing a quitclaim deed, if you want to prepare it yourself, you can absolutely do that, for sure. All right, so every single state is just a little bit different as far as their deed requirements. So my suggestion is maybe, if you're gonna do a lot of these, maybe you do their first one with an attorney, then you kind of use their quitclaim deed as a template moving forward. Otherwise, what you can do is maybe get a blank quitclaim deed from a paralegal, somewhere like LegalZoom or somewhere local to that state. Now, when you have that, what you want to do is call the county and ask them specifically what needs to be on that deed. I mean, there's some counties are very, very specific. The paper has to weigh a certain amount. It has to be in this type of font. It has to have this kind of margin. So ask them exactly what you need to know when it comes to submitting that deed. Also ask them the transfer tax, which will be based off your sales price, and the recording cost for that deed. And that'll be based off the number of pages. So go ahead, ask them everything you need, send it off, they'll record it and send it back to you. So quitclaim deeds, it's a great way to sell properties for low value properties. Obviously, you don't want to pay an attorney $500 to prepare a deed when the property is only worth $1,000, right? So it's a great way to do it yourself. It takes a little bit of effort to figure out exactly what you're doing and to make sure that it meets the county's requirements. So hopefully they'll help you, Mark. Next question I got is via YouTube. Actually got it a couple days ago. Gerald Green, he said that when he checks the tax deed calendar for Duval County, where he's at, there are no houses to buy. Absolutely. And the selection is going to vary from auction to auction and from county to county. First things first, just because there are no houses this month does not mean there won't be any houses next month if you're only interested in purchasing homes, right? Just because there maybe just lots this month, it might be lots next month, but also might be a few homes mixed in there, okay? With that said, if you're dead set on purchasing homes and there are none month after month after month, try a different county. There's definitely homes that go through tax sale foreclosures, tax auctions, that kind of thing. So try a different county, and you'll certainly find them sooner or later. The bulk of what you'll see is probably going to be vacant land, but you will definitely see some homes at tax sale auctions. And of course, guys, never frown at vacant land because you make a lot of money on vacant land. So don't always just focus just on single family. Get such tunnel vision that you overlook other opportunity. Gerald, hopefully that helped you. Via YouTube, let's see, Yoshika. Okay, I answered this question yesterday for her. Wanted to let you guys know as well. It says, Mr. Dimon, I have another question regarding suit to quiet title. Which is better, in your opinion, to use? Suit to quiet title or going through the process using tax title services? She's talking about a tax sale certification or tax foreclosure certification. Tax title services and clear to sell are the most popular. I'm trying to figure out which way would be the best as well as cheaper. It's actually a two-part question. We'll get to the other part in a second here. So as far as being the best and being cheapest, it really just depends on your objectives. The suit to quiet title is an actual lawsuit. It has to be filed by attorneys. There's statutory requirements as far as notices, and as you're dealing with attorneys and you're dealing with the court system. So it's going to be much lengthier than a tax foreclosure certification. With that said, depending on how many you're doing and the attorneys that you're working with and stuff, it might it might be just a little bit cheaper then a tax foreclosure certification. And also, once that judge signs off on it, says yes, the suit to quiet title is done, that is, the property by then is perfectly clear, which means you can go to any title insurance company in the country. You're talking like Stewart, Old Republic, Land America, Fidelity, First American, all those will issue title insurance on a piece of property after it has gone through the tax, after it's gone through tax foreclosure and after it's gone through the suit to quiet title. Now, when it comes to a tax foreclosure certification, what happens is you kind of have to play by their rules because it's an agreement between them and the insurance companies. So what will happen is they'll go through it, they'll certify that property. Now, it'll be much, much shorter. Some of them say they can do it within 20 days, which is very, very quick. So if you need to turn and burn that property, that might be the avenue for you. But it'll also be a little bit more expensive, typically, again, depending on the attorneys in your area and how much they're charging. Along with that speed will also come stipulations. They'll tell you typically you need to use this type of title company. Or they'll also say you need to sell the property within a year or we'll have to recertify it. So depending on your objectives, depending on how long you'll hold that property, if you have a long, lengthy remodel, it's going to take 6 or 8 months, just go to the suit to quiet title. It might save a little bit of money and you won't have to worry about anything, right? But if you want to turn and burn, maybe the tax foreclosure certification. So it just depends on your objectives. The second part of her question says, I've been reading a lot about capital gains when selling real estate. Do you happen to have any videos on this topic? I want to get a clear understanding of the dollar amount that I would need to step aside for each gain to the IRS. Any information would be appreciated. Thank you. Yoshika, truthfully, everybody's tax situation varies. My tax strategy and your tax strategy are probably two different things based on, kind of the plan that our CPAs have set up for. So my best advice, sit down with a CPA. It's going to be worth $100 or $200 appointment. Just say, hey, this is what I'm doing. Tell me the best way to do this. How can I save taxes? How do I set this up? That kind of thing. I really can't give tax advice because, again, everybody's just a little bit different. So sit down with a CPA would definitely be money well spent. Hopefully I answered your question. Let's see. Perfect. Awesome. Thanks. Let's see. Elias, hi. You mentioned once that you don't need to clear the title in all occasions. In what case is it not necessary to clear the title? When you don't find resale information, when there's a warranty deed, do you have any videos on this? So, yeah, I've got a bunch of videos on this. It's just maybe just depending on how you search for them, I guess. But basically, you don't need clear title if you're not giving a warranty deed and not providing title insurance. So that's going to really shrink your buyer pool. So if you have a buyer and they don't want a warranty deed and they don't want title insurance, it's probably because it's a very, very cheap property. And it's really going to shrink your buyer pool. And I've sold lots and lots like that, and there's nothing wrong with it. But if you clear that title, and you use a warranty deed and you get title insurance, your buyer audience will just about be everybody, right? Everybody will want to buy that property because there is nothing to worry about. So more expensive properties, you need title insurance, need that warranty deed. Cheaper properties, you can get away without clearing the title. Elise, hopefully that helped you. Looks like I got a few questions coming in live too. Let me go back and forth between the pre-recorded question or the pre-asked questions and the live ones. Airfinder, can you do a quiet title action by yourself in Florida? The answer to this is yes, depending on how the entity is set up. If you own the property in your personal name, you can do it. I've not done one myself. I always hire attorneys to do that. It's a lawsuit. I mean, when an attorney takes over that file as a lawsuit, like that's their deal. They went to law school for that. I'm just handed to them, pay them money, don't have to worry about it. And you can do it for yourself. Now, if you are set up like an LLC or an S Corp or it's a separate entity, then you cannot do it. And you might want to talk to your attorney about this, just get confirmation, but you can't do it because then you're basically acting as an attorney, acting as a lawyer for another entity. Like that's a separate entity. Your LLC, your S Corp, those are all separate entities, right? So you can't self-represent a different entity because that's considered completely different in the court system than you acting as a lawyer without a license. So you might want to call the county, maybe do your first one through an attorney and have them walk you through the process, or at least kind of peer over their shoulder so you kind of get the ropes, that kind of thing. Eric says, what are some red flags when looking at the title history? An experienced investor may pick up on that, and an inexperienced investor may not notice. There's really a lot of them, truthfully. I mean, I could go on and on and on, but I would look at, when you're looking at it, the easiest chain of title is A sells it to B, who sells it to C, who sells it to D, and it keeps going down the list, and then you have a mortgage, then it gets released, that kind of stuff. The thing that starts really bothering me is when you have 5 or 6 sellers I'm sorry, 5 or 6 buyers or 5 or 6 sellers, like, and it goes from one person to the next person. So like maybe partial interest are transferred from one to the next, and then maybe you have to worry about noticing requirements and stuff like that. That really gets frustrating and difficult to follow. And when I see a lot of that kind of stuff, you just kind of might not be worth it. Another thing that I'll see sometimes is maybe you search a history of their names, and what you can see, especially like in the state of Florida, where we have a lot of sinkholes, a lot of foundation type issues, the insurance companies, if they make a payout over a certain amount, it's actually recorded in records against that person's name. So it might not be recorded in the building department records. I mean, it should be, but they might not record it, or they might put a typo or something like that. So maybe somebody that owned it 3 or 4 people ago, you can search their name, and then something will pop up, say, hey, Farm Bureau. I was looking at one the other day. The house was worth $100,000. Farm Bureau paid out $120,000 for sinkhole repairs like 20 years ago or something. Like, it's just an insane amount. So like that's something that you might be able to catch on. If I really think about it, there's a few others. It's a good question. I might do a video on this soon. Thanks for your idea. I hope that helped you out a little bit, Eric, but I'm going to do a video on this for sure. Yoshika, got it. Thank you. Absolutely. You're definitely welcome. Let me jump back to some other questions real quick, and I'll get back to the live ones. Let's see. Elise, we got Ernesto. You sent this via email. Where do the auctions take place? I have seen them like everywhere. Typically what you'll see is in some sort of county building. Typically it'll be a jury assembly room, a courtroom, maybe a conference room, something like that. But I've seen them. I've been to auctions at country clubs. I've been to auctions on the courthouse steps, in schools, churches. I've been to hospitals, like conference rooms. They've had them. VFW clubs, moose lodges. I guess that's what they call them. Restaurants. I've even been to casinos, right? Like anywhere where you can assemble people, depending on who puts it on. So usually if it's like the county putting it on as they're like the auctioneer, it's going to be in a county building just because they're cutting costs, all that good stuff. If it's a private company, they'll go really where the cheapest places. I've been to some pretty ratty hotels too. So just about everywhere, Ernesto. Paula Hart says via YouTube, how to start? Question mark. Simple question. Simple answer. Get this book here, Tax Law Playbook. It's a free book. It's an actual book. We'll ship to you $4.97. This is a great way to start. It tells you all about tax law investing and stuff. Maybe you hate it. Like after you read this book, maybe you just like, tax law investing for me. That's cool. But if you want like a great overview, this is a good book for you. Obviously, we have lots of videos here on YouTube. And of course, another way is to contact the county and say, hey, can you tell me about this whole tax sale thing? And just see what they tell you. They might be helpful. They might not, but they might be helpful. So definitely a tax sale playbook, and then YouTube, and then the county, of course. Let's see. Johanna, when you go to sell, do you list your properties with realtors, or how can you save on that commission? So first off, let me work this backwards. If you're worried about the commission, if you're really worried about squeezing pennies so tight that the commission is going to be a huge factor when it comes to your sales price, you probably shouldn't have been in that deal in the first place, right? The commission's a very small percentage, and the deal is like the realtor's handling that and stuff. Let them do their job. Pay them. They'll get you more money. They can market it. They can spend their money marketing it, that kind of stuff. Make it easy. If you're going to list it with a realtor. With that said, I don't list everything with realtors. I sell lots of stuff myself, lots of stuff online, lots of stuff using my buyer's list and that kind of thing. Guys, sorry if you hear some background noise. There's actually the lawn crew is here today, so sorry about the background noise. But I sell some stuff online, buyer's list, all that good stuff. I do list properties with realtors. Now, when you list a property with a realtor, it needs to have the ability to get title insurance. So that suit to quiet title needs to be done before you even go and list it with them. Okay, so like take care of that before you list it with them. And typically it's gonna be the high dollar stuff. You don't want to give them a $2,000 lot and say, here, make this work, because you've got a few $100 of commissions and clearing the title. There's gonna be no money left over. So make sure it's usually the higher dollar stuff is what I list with the realtors. Let's see. Metal Tiger Bull, are there any online auctions in Georgia? It's been a couple of years since I invested in Georgia, and I don't know, to be honest with you, right off the top of my head. I could do a quick search and see. My suggestion is, wherever you're at in Georgia, whether it's your hometown or maybe you're just thinking about investing, I don't know. But if wherever you're at, looking for those counties. Look for 5 or 6 counties that interest you and just go to their websites and see how they auction them off. They might be in person, they might be online, and it'll kind of give you an idea. Usually if you have a good sampling of 5 or 6 different counties across the state, you'll have a good idea of how they're going to do. If you look in Florida, for instance, you do 5 or 6, you're going to have 3 or 4 that are going to be online and 2 or 3 are going to be offline. So yeah, a little bit more than the majority in Florida are online. So just sample 5 or 6 different counties, search around and see what, see what you find there. But I'm not, off the top of my head, I don't remember, to be honest with you. Airfinder, thanks. What is a realistic price for quiet title action in Florida? It depends. Okay, so first off, absolutely what I would do, 100% suggestion, call multiple people. Don't just look in the phone book, find a real estate attorney and call them and say, hey, I want to do a suit quiet title and just write them a check. Don't do that because a long time ago when I was calling around to get prices and stuff, when I very first started, I got prices, literally the cheapest one I had was $650. I've never seen that cheap again. And then the most expensive one was like $4,000. Same city, same same exact property, same courthouse, same everything, right? So the prices just go crazy. So call 3, 4, 5, 6 different people. It'd be great to start a relationship with them, but at the end of the day, your goal when you get that quiet title is to get title insurance. So it does not matter, how nice they are, how fancy their offices or anything like that. All you want is that title insurance. Realistically, $1,500, somewhere in that ballpark, maybe a little bit more, $2,000 maybe. You can also get a little bit cheaper too. Like if you go to an auction and you're buying 2, 3, 4, use that as leverage. Say, hey, I've got 4 suit and quiet titles I want done. You can give those to the attorney and say, what's the best price for all 4 of these? That's a great way to get leverage. That's actually the way I got the guy to do it for $650. I gave him, I think, like 10 at one time or something. And he's like, okay, perfect. I'll get them back to you when I get them done. No rush. He was kind of like a semi-retired guy. So that was kind of really a slam dunk, saved me quite a bit of money. But the deal is, if you've ever seen a suit and quiet title, and maybe I'll do a video about this as well, like try to figure out how to show it all. But a suit and quiet title lawsuit, is probably a 10 or 12 pages, and the information on there is exactly the same. Just the legal description and the names will change. So what they do, they go into Word or whatever they have, change the stuff, submit it. Now, obviously, there's submission requirements and noticing requirements and that kind of stuff that I'm not overly familiar with because that's their job. But guys, a lot of times if you do more than one, they'll just go in there and change the names and can give you a discount. So hopefully that helps as well. Yeah, kind of a long answer to your question. Eric Schultz, thanks. Yeah, absolutely. You're definitely welcome. Let's get back over to a couple other questions, guys, and I'll go back to the live ones in a second. Let's see. Eric O'Hare via YouTube messages. What's best, a tax lien or tax deed? It's a loaded question depending on who you ask and depending on what their objectives are. If you if you have some money and you're looking to invest and earn an interest rate and you want it kind of passive, you don't want to be very actively involved, actively managing a piece of property, that kind of stuff, like working on selling it, have to do that, then get a tax lien. If you're looking to make more money and be more involved, get a tax deed. That's the short answer. So less involvement, less money, tax liens, your interest earning money, more involvement, more money, tax deeds, because obviously you have to sell that property. You're still, at the very beginning, you're still in the same research. You're still researching that property very, very extensively because that's the underlying asset of both liens and deeds. It's just when you have a tax deed, you have to sell it in order to realize your investment. Gilson, hopefully I didn't mess your name up. Gilson, how do I start as a non-USA resident? Would you know the requirements? Yeah, absolutely. And this will depend a lot on the county that you're working in. Some counties will have different requirements, but for the most part, it's very, very simple. Just what I would do is I would probably start, go to the county that you're interested, email them, ask them, is there anything special? Most of the time, there is not anything special. Now, if you want to start an LLC, an S Corp, if you're worried about taxes, if you're worried about all sorts of kind of stuff like that, that's stuff that I really can't help with. I'm not overly familiar with it. But if you're investing in your personal name and you're not worried about that stuff right away until you start making some money, go ahead and start investing. And that's really about it. But call the county first or email the county and say, is there anything a non-US citizen needs to do it? I've got a lot of members in my academy. I just have, obviously I haven't gone through that process myself, so I don't know exactly all the ins and outs. But I can tell you some will require you to register certain ways. You might have to put a deposit down and stuff like that. But it's not overly complicated. I mean, I actually had a guy in, I think it was Hong Kong yesterday, 2 days ago, one of my students, he bought a couple lots in Michigan and flipped them. And but if you want to, also what you can do is you can go to taxsellacademy.com/contact, I believe, or maybe contact-us. If you want to send me a message and or just put your, get your email address to me somehow, or you can email it to heather@taxsellacademy.com. I'll check with my members and get you some more details as far as registering as a non-US citizen. Hopefully that helped you, Gilson. Metal Tiger, yeah, absolutely. You're definitely welcome. Aaron found a great answer. I'd love to see a video on that quiet title action. Yeah, absolutely. I've got a couple videos on quiet title actions, but like I said, what I'm going to do is I'm going to get the actual deed and go through, or the actual, I guess the complaint, the actual lawsuit, and go through it line by line. Just kind of explain some stuff to you. It's pretty simple, but it's something that you don't see every day. So I'll get one up and figure out how to put it on the screen where you can read it and stuff. In Florida, where you have to put down 10% of what you think your max bid will be. What if you end up going over what you'd originally planned on bidding? Yeah, those auctions really, like when you put down deposits like that, or you have a sealed bid auction, stuff like that, it really bugs me sometimes because you don't know how much you're going to spend and that kind of stuff. If you go, sometimes if it's an online system, it'll typically stop you. It'll either stop you, or it will cancel your bid, or it will void your bid, and there's no negotiation. If you're in person, you can maybe talk them into it, or figure out a way around it. But if it's an online system, most of those online systems, the most popular ones, Real Foreclose, maybe it's slipping my mind. I can't think of it right now, but the one that most counties use in Florida, I believe it will stop you, really avoid your bid. So just, if you got to put more money in there, it stinks that they're holding on to your money. It's a process and it takes time to get it back and stuff. But if you're really concerned about that, obviously, I guess just put more money in there, but it stinks because they are holding on to your money and they're not paying you interest. All right, let me go back to a couple more questions and then we'll jump back around. Let's see here. We got Mary Ann via YouTube. Where do you find the OTC list? It sounds like that's the easiest way to do it. OTC, over the counter. That's buying basically properties that did not sell at the auction. Call the county. Sometimes they're posted online. Sometimes it's a sealed bid process. Sometimes you have to, actually go to the county and get it. So an OTC, that's how you get. That's the answer to the first part of the question. As far as it sounds like the easiest thing to do, yes and no. It is definitely the easiest. You go in there, give them money, and you walk out with it. That's easy, right? But you have to think about it. These are properties that the owner did not pay the taxes on. Then they went to an auction, and nobody at the auction house or wherever the auction is bid on these properties. Now you're the third person, right? Like you're the third line of defense as far as buying these properties. So the owner didn't want it, nobody at the auction wanted it, and now you want it. So you have to think to yourself, what could be wrong with that piece of property? The large majority of OTC properties are junk properties. They're your slivers of land, they're underwater, that kind of stuff. Not to say there aren't some steals in there, because I promise you there are steals in OTC properties. It's just a matter of getting those properties very, very quickly. As soon as they hit that list, research them and see if you want it. And if you do, go in and buy it, because the best ones are gone fast. But the stuff that's been on that list for a year or two, I can promise you is probably junk. So it is easy, because you go in and give them cash, walk out with property. But you really need to research that property. You need to really just quadruple check what you're doing, because you can get yourself in a world of hurt buying OTC stuff without much research. Let's see. Gilson, thanks. Yeah, definitely. You're absolutely welcome. Thank you for your question. Metal Tiger Bull, thanks. Absolutely. Definitely. Got a few more questions. Let's see that we received ahead of time. Jake Mears, my county doesn't have any auctions scheduled. Jake, go to a different county. Some counties don't have them. Some counties have, I guess, very, very responsible taxpayers that pay their taxes every single year, but some counties have irresponsible taxpayers. So it just depends on your area. Go to the next county over, go to a different state if you got to. Luckily, tax law investing does not confine us to one particular county. So go wherever you got to in order to make it work. So hopefully that helped. Ken, if I buy 100 liens, about how many will go to foreclosure? What is the process if they don't pay? So it depends on who you ask in the county and all that good stuff. The nationwide average is 93 to 95% of tax liens will get redeemed at some point. This excludes like redeemable deeds and stuff like that. Those are, that's a different animal. But tax liens, 93 to 95%. The rest of them will go to foreclosure. And the process depends on the state. In some states, you literally just fill out a piece of paper, submit it, they give you a deed, you walk out. In other states, you have to hire an attorney, or you can probably do it yourself, foreclose that lien, and then actually go through a whole judicial foreclosure process. Just depends on your state. Figure out your state laws and that kind of stuff. So hopefully that helped you. That was Ken. Michaelis. Hopefully I spelled or said your name right, Michaelis. I'm a real estate broker. Are you still one? Why didn't you like it? Why not do both? So apparently you know a little bit of history about me. So I start off as a real estate agent. I'm a broker, all that good stuff. So then I got me into tax lien and tax deed investing. I am still one, absolutely. I'm active for people that are very, very close in my sphere of influence. My partners, myself, and very, very close friends. I sell a few homes a year, a few lots a year for other people, and that's more or less in favors, that kind of stuff. I don't do it actively. These are people that seek me out, and people I know very, very closely. I know their situation. That's the only time that I do it, just because they respect my opinion, and I'm happy to help people out when I can. Why didn't I like it? It's not that I didn't like it. It just kind of wasn't for me. Real estate brokers, there's a lot of realtors that love it, and that's great for them. It's their cup of tea. It was not my cup of tea. I like buying and selling properties and teaching other people how to do it more than anything. So yes, and why not do both? You can definitely do both. Yeah, by all means, be a full-time real estate broker, real estate agent, whatever you are, and like buy properties. That's cool too. You can definitely do both. Tommy via Facebook. The tax sale properties in my area sell for too much, like pretty much market value. So there isn't anything I can do to make it work? Question mark. Oh, it's a question mark. Tommy, find a different area, man. Some areas are very, very, very competitive. Now, one thing to note too is just because it's competitive right now does not mean in 6 months it's going to be competitive. Maybe you hit it on a bad day, or maybe you just had an issue where everybody just happened to show up and wanted the piece of property that you wanted, right? So like hit it on a different day, and don't give up on that area just because if it's especially if it's local to you. Don't give up on that area and forget about it completely. But if everything's continuously selling for more money than you want to pay, try a different county. If everything in that county, every county you go to, try a different state if you got to, right? What you can also do is look at the tax sale results online and kind of get an idea before traveling or before like doing loads and loads of research on a specific county to see, are they going for way too much money, or are they actually really good deals? So maybe do a little bit of research ahead of time. That might help you out too. So what else we got? Let's see. Simon asked, can I do this in Canada? Yeah. Okay. I'm sorry. I don't know. As far as tax liens and tax deeds inside Canada, I have no clue. No idea. I'm completely clueless. I'm the USA tax guy, man. I'm sorry I can't help you. If you're a Canadian citizen, yeah, you can definitely do it. But I think you're asking if you can do this inside of Canada, and I have no idea. Kelsey via YouTube. It sounds like December is a slow season for real estate and no options in my area, question mark. I actually did a video on this. I think it's like investing in the holiday season. It's like a video I did 2 or 3 videos ago last week, maybe the week before. Yeah, December is a slow season. You have to think like county offices slow down. They ramp everything down. They may take a week off for Thanksgiving or a few days. You have people traveling and stuff. And a lot of counties don't even like doing tax sales in the first place. They just have to do them to get that tax revenue rolling, that kind of stuff. So they'll push auctions back to after the first year. But it's a great time to really learn what you're doing. Review all my stuff, figure out exactly what's going on, what your objectives are, right? Maybe figure out the real estate market. If there's a tax sale auction in January, don't wait till January to research it. Start right now. Give yourself a head start. It's a great time to learn, great time to really catapult your tax sale business into 2019. So use a slow season, in real estate or tax sales. And I'm not all counties shut down. I mean, there's a lot of tax sales that do happen in December, but use the slower season if it is in your area as a learning time. Really help build that knowledge up inside you and use it to catapult yourself come 2019. Let's see. Wonder Brito, hopefully. What's the entity structure you use to manage tax sale? Entity structure to manage tax sale. As far as my structure when I buy, like my investment company that I use typically use an LLC. If it's a piece of property that I'm going to be able to flip really quickly, every now and then I'll buy some stuff with an IRA, which is a way to defer taxes. But most of the time, it's going to be an LLC. I got a number of different LLCs that I use to buy and sell these properties. Just depending on if some of the properties I got partners with, a lot of stuff I got on my own. Depending on how kind of the exit strategy too. If it's going to be a long-term hold, I'm going to hold it in one LLC. It's going to be a flip, another LLC. So so hopefully that helps you. LLCs are very, very popular. You can also use S corps. There's a lot of different ways to structure it. To protect you legally, to protect you with your taxes and that kind of stuff. Hopefully that's the answer you're looking for your question. Let's see. Metal Tire Bull. If you buy a property and you find out that there's a serious issue with it, can you file a quitclaim deed to get rid of it? Unfortunately, you can't unless you find somebody to accept that quitclaim deed. You can't. You can't legally file a fraudulent deed. So if you have a piece of property and it's just a disaster, You can't deed it to your ex-wife or your ex-husband, right? I mean, you don't want to do that, or you can't deed it to Donald Duck or somebody like that. You can't just go off and deed it to somebody that doesn't exist or somebody that doesn't want the property. They consider that fraudulent. There's really no way to get rid of it. You might be able to find some, maybe a bottom feeder or somebody, and might lose money on it, but it might save you some money in the long run. That's definitely one of the risks. If there's huge issues, you still have to figure out what to do with that property, because at that point it's your responsibility, unfortunately. So that's something that you have to take that into consideration, that kind of stuff. Everybody, nice. All right, what else we got here? We got a few more questions. Let's see. It seems like you, okay. Stu 18442. What's a county land bank? A county land bank is actually different than a tax sale auction, Okay, so what happens? A county land bank is basically properties, usually homes or land, that a county owns. And a lot of times they'll own these properties, they'll buy these properties to control blight or control dilapidated homes in a particular area. Now, sometimes they'll go in there and they'll remodel them and that kind of thing. Then they'll try to resell them. Basically, when you have a land bank, the county is getting into the real estate business. But they do this to kind of control areas. If an area is really going downhill, they'll use some funding, some tax dollars to make a house nice. Then they'll sell that house. Now, sometimes for properties that do not sell at tax sale auctions, they do end up at the county land bank. Or in some states, the county land bank will say, do not sell that. They have the authority to. They say, do not sell that property at the tax sale auction, but instead we'll hold on to it. And typically when they sell properties, they don't want to sell them to investors. They want to sell them to residents. They want to work out deals. They want to, make the community a better place, all that good stuff. It can even get a little bit political because, I've seen people run off, say, hey, the land bank has gone through this many properties. Look how nice we made it. And I've seen this in campaign ads before. So it's a little political, that kind of stuff, but it's really not, the system's not designed, the land bank system is not designed for investors. And again, it's completely different in tax sale investing. Hopefully that helped. But again, tax sale properties do kind of end up there sometimes. Taylor, do you know the counties that sell tax deeds over the counter? The counties I've called on don't do those, they re-auction. Good questions. Over the counter, OTC, leftover stuff, whatever you want to call them, right? That's basically where you go in. We discussed this a few minutes ago. You go in, you give them some money, walk out the property, you walk out the deed of the property. So again, some states do not offer that at all. So they'll have one auction or maybe two auctions. And then if nothing happens, then what they'll do is maybe re-auction off the next year, or maybe the next year. They'll just keep trying to re-auction off until somebody goes in there and buys it. And then maybe eventually the county will hold on to it and they'll have a surplus land sale every 10, 15 years, right? Like it just kind of depends on what the state laws say. But a lot of counties, if it does not sell at auction, it will sell OTC over the counter. So it just kind of depends on what your laws. It's my assumption is that in your state, if every county re-auctions, they're telling you that they don't offer OTC properties in your state. Or if they do offer them, maybe they re-auction them once and then everything sells and they don't have anything left over to offer OTC. Hopefully that answered your question, Taylor. Let's see here. We've got Reese. I've got a few more questions, guys. If you have any more questions, go ahead and feel free to submit this on the live chat. I've got a few more of the questions that were asked ahead of time. Reese, via Facebook Messenger, he says, he said, I'm in Mississippi, which does liens, but I want to buy and sell tax deeds. Investing out of state frightens me. I can understand that. So first off, Mississippi is a good state for liens if you do want to buy liens, that kind of thing. But if you want to buy and sell tax deeds, you're going to have to go out of state, obviously, because they don't do it in Mississippi. But the best way to do it is kind of get an idea as far as the areas that you want to invest in. Do a little bit of research. And I'm not saying just like go to Google and you should have something figured out in 5 minutes. Maybe you take an entire month, like researching areas and states and all that good stuff, right? And figuring out where you want to invest. And then from there, go through a lot of my videos. There's so many videos that I have about research on YouTube even that, it can really clue you in on what to look for and how to invest out of state. It should really make you a lot more comfortable. Obviously, inside the academy, we have lots of other stuff as far as that goes and hiring scouts and whatnot to really make you more comfortable doing it. Yeah, it can be frightening investing out of state, especially if you're not familiar with it. I was scared as can be the first time I hopped on a plane and went out there and, went to my first auction out of state. It was so nervous and everything else. So, but yeah, over time, once you do one or two, you're like, hey, this isn't so bad. And eventually you'll be in a number of states as your business starts to grow. Helen, she says, what's the biggest mistake you see people doing when they first start, I think when they first start buying tax sale properties, is what it should say. Like, what do I need to avoid? Laugh out loud. Two things. Number one, they don't know what they're doing. They heard you can get rich quick, which you can't. It takes time, it takes effort, it takes work. And they go and they buy the first piece of property that they see, and usually they overspend, that kind of stuff. I don't want anybody to overspend on anything, but just because a property is at auction does not mean it's a deal, guys. Like, you really have to do your research, and that's the second mistake that I see is people don't know how to do research. They don't know what they're looking for. They look at the photos. Maybe some counties have photos of tax deed properties. They're like, okay, here's the property, and they bite off that photo when the photo was taken 5 years ago or something. That's just a file photo, right? Like, you really need to understand what you're doing, understand the process, read through the laws. The laws are absolutely boring, right? They're so mundane and so boring to read, but I promise you, reading through those laws will kind of clue you in on like what's going on, like how the system operates, that kind of stuff. Watch my videos, watch all the videos that you see. There's a bunch of information online. Make sure it's good information, of course, but read Tax Sale Playbook. That's another great way to learn what you're doing. But yeah, I mean, that's the biggest mistake. People don't know what they're doing, and then they don't do their research. Those are the two kickers. I mean, research equals your results. I've said that over and over again. So really understand what you're doing and research the properties. Those are the two biggest mistakes. That was Helen. Looks like I got another question popped up on YouTube Live. What would be your recommendation to people just starting? I'm planning to open an LLC to start a business to manage both tax liens and tax deeds. Any recommendation from you besides that? So, I mean, that's a great way to start for sure. LLCs. What I would do is I would just have one LLC to start off with, hold everything in there, and then as you get a little bit more complex, then you can start doing it. So you have to remember, every LLC you have, depending on the state, of course, but every LLC you have, you're going to usually have to file a annual report with the state to tell them you're still active and all that good stuff. That costs money. It's going to be, $100, $200, $300 every single LLC. And for example, mine are due, I think it's April 1st or March 31st or something. And every year when that date comes up, I'm like, oh my gosh, here goes a lot of money for all these LLCs. Now, I have them for good reason and stuff, but don't go out and just start, you don't need a number of LLCs just to do it. So start off with one that's great, hold everything in it until you get more complicated or until a CPA tells you need to do other ones. And also, along with those annual reports and stuff, you also have to pay a CPA to do those tax returns and stuff like that. So, those are expenses. You have to file it, annual reports, and your CPA tax return, all that good stuff. So those are expenses that a lot of people are like, whoa, wasn't expecting this, right? They can definitely add up over time, especially if you're not making any money, if you're just starting out. Something else you might, kind of just like a side note here, is if you're opening an LLC, maybe wait till January 1st, 2019 to do it. And the reason I tell you this is if you open it right now, you're going to have to file a tax return for 2018 and then 2019, even though you don't maybe use it in 2018 at all, right? So if you're not going to buy any properties this month, or I guess December, then maybe don't open it right now. Save that month. That way you can save that tax return, all that good stuff. So that's a little side hint there, but I would open an LLC, throw your company, throw stuff, and you can always hold in your personal name. That's kind of how I started out because I didn't know any better. But if you're doing it in your personal name, you don't want to do anything that has a huge liability or risk. If you're doing stuff in your personal name, maybe do vacant lots, do the simple stuff. If you're buying a dilapidated house in your personal name, and the house falls down, the city's gonna come after you personally, and there is no liability protection, that kind of thing. So LLC, definitely start with one. Hopefully that helped you. I got one more question from ET here. Yeah, guys, if y'all have any questions, actually, I'm sorry, I missed a question on YouTube on the live. Let me answer ET's question real quick. Okay, he says, how do you know when you're, quote, ready? A lot of it is going to be a gut feeling. I mean, you're always going to have a little bit of butterflies. I mean, I still have butterflies to this day. Did I do the right research? How many people are going to be there? Am I going to get the properties that I want? Do I have everything I want? There's certain procedures and systems that I have in place, and I teach them inside the academy. Like, this is what you need to do like the night before, that kind of stuff, right? To kind of make sure, all the nervous system is as small as possible, but you're always going to be a little bit nervous. But basically when you're ready is when you can understand the laws inside and out, when you're very, very confident in what you're doing, that, I know exactly what's going on in the piece of property. I know the history of that property. I've been by it. I know what it's worth. I know what I can sell it for. Here's my exit strategy. When you know all that stuff, without a doubt, it's just a matter of going and buying that property. That's definitely when you're ready. What you don't want to do is kind of be unsure yourself. Like, I think the value is around here, and I think the property's in okay condition, and I think it's worth this, I think I'm gonna, like, don't do that, because when you go in like that, you're kind of just like throwing money into the air on a whim and hoping it sticks based on, you know, a bunch of maybes, right? So make sure you know exactly what it's worth. You know exactly what's there. Make sure you know everything about that property, everything about the system, that you're not missing anything, and you know, kind of pull the trigger and go from there. You're always going to be a little bit nervous, but your gut should tell you that you're ready to go. And obviously, there's great ways to you know, to learn that kind of stuff too. Let's see. Thank you for, okay, this is a question I missed earlier. Talking about tax strategies, managing tax liens and tax deeds. Do you buy them as an active or passive investment? So tax liens are going to be a passive investment, because just about all of them, you know, you don't have to foreclose on that kind of stuff. It's actually pretty rare that I've had to foreclose a lien. And the tax deeds are actually, I have two different LLCs, one for lien and one for deeds. You can combine them though. I mean, they can figure all that good stuff out. Tax deeds are going to be definitely an active investment, because it does require lots of effort and lots of work, and it is, I mean, it's you know, my LLC that owns the deeds is my employer basically. So hopefully that helped. Bishop Blueprint, do you offer an annual price for the Tax Law Academy? I do not offer an annual price. We have a 6-month startup member package. And if you go to taxlawacademy.com, click on the Tax Law Investing web class, it will actually, you know, you can go through the webinar, all that good stuff, and it'll introduce the 6-month package for you. Before you do a month package, or truly maybe even before you buy my book or anything else, you know, again, this is minimal money, but, you know, make sure you like me on YouTube, make sure you understand what I'm talking about, you like the way I talk, you know, and I teach and all that good stuff. If you don't like me, hey, that's cool, but, you know, make sure you go through that before you actually invest in the academy, you know, because I don't want you there if you're kind of hesitant on me, but yeah, if you're looking for a 6-month deal, the startup package is definitely what you want to do. And you can actually just go straight to taxlawinvesting.com to register for the web class. Got a couple more questions popping up here. Let's see. What are opening bid numbers usually based on? So opening bid numbers are typically going to be based on the amount of the delinquent taxes, penalties, fees, and interest that is owed to the county. So what happens is you have, you know, back due taxes, right? That might be down here. And then you have the interest. So if it's a tax deed, for instance, you'll had interest maybe for the 2 years that the county held it in house. They also have like foreclosure fees, might be posted in the newspaper, stuff like that. So like they're going to add all that stuff, and that'll be your opening bid amount. In some states, they might have other fees that they add on top of that. You know, maybe they had to go and mow the grass. They might add that on top of it. Maybe they require you to pay the taxes ahead of time, like a year. You know, if they're offering off in the fall, maybe they make you pay the entire year for that year that they're selling it and those taxes, and they add that on top of it. I've seen that plenty of times. But typically it's the back due taxes, penalties, interest, and fees. That's what it's going to be. The opening bid is going to be off of. And then if you're buying just liens, it's going to be the back due taxes, of course, no interest. And there might be some fees, like, you know, maybe a $5 publication fee, $50 here and there, that kind of stuff. Very, very nominal stuff. But obviously factor that in, because it's going to impact your return on investment. Everything that is owned by the taxpayer property owner. Air Finder, I don't think I understood that one. Everything that is owned by the tax. Maybe you're commenting on the question, not sure. Ben Baker, resells in Florida. Ben, are you talking about properties that go unsold at tax auction, maybe like OTC type stuff? Hopefully that answers. I mean, not sure exactly what you're asking there. Sorry about that. But yeah, Florida. So if it goes through, so Florida's a little bit different. It's a hybrid state. They first sell tax liens. After a couple of years, the tax lien holder has the ability to push those forward to tax deed auction. Okay, gotcha, Eric. Sorry, thanks. So the tax deed at the tax deed auction, it'll open up to the amount that is owed to the tax lien holder in Florida. And then from there, you have the ability to buy that deed. If nobody buys it, the lien holder walks away with it. And at the tax deed auction, you know, there should not be, theoretically in Florida, because people do buy tax liens, there should not be that many OTC properties. The only OTC properties in the state of Florida are going to be not very good properties, because you have to think in Florida, because they do offer tax liens and tax deeds both, what happens is the county actually owns those liens. So the tax lien, if it goes unsold, the county will own that lien, and they'll actually take it to foreclosure at some point. Usually they're not right at 2 years. They might be more like 5, or I think the limit is like 6 or 7 years. They might be more closer to the limit, but the county will actually take it to tax deed and try to auction it off. And if nobody buys it at the tax deed auction, that's the way it gets to OTC in Florida. So nobody buys it at tax lien, and nobody buys a tax deed, and then the county owns it in the state of Florida. They offer it OTC. Usually it's not pretty good stuff though. So hopefully that answered your question, but hopefully that's what you're looking for. I think, guys, that is about all the questions. If you have any questions, go ahead and pop them through. I've got about 10, 15 more seconds I'm going to give it, and then we will kind of wrap up here. So while I'm waiting for the last few questions, just see if there's anybody else. Guys, again, if you haven't got this book yet, Tax Sale Playbook, it's a great book. It's an actual book. I don't know, it's a couple hundred pages here. It's a great way to learn about the business, the way I teach, that kind of stuff. The book is completely free. I got loads and loads and loads of these. $4.97 to get it shipped from my warehouse to your front door inside the United States. So I guess that's about it, guys. If you want the book, absolutely go to taxsaleacademy.com. Click on the book. Zach just asked a question. Can you talk about finding funding, etc.? Yes, absolutely, Zach. So finding funding can be, it really depends on the person, right? There's so many different ways to do it. The best way, of course, is cold, hard cash, cash money, cash talks, right? If you don't have cash, you can also do it in-house. I'll first start with the in-house stuff. You can also do it in-house. You know, if you can make extra money, that's awesome too, right? If you can sell your boat, that's awesome too. But as far as like borrowing money, credit cards, that's how I got my first few properties. I did a cash advance at like 30% or something completely stupid, but it was a lot of money, but I made a lot of money and I was able to pay it off. Now, don't be irresponsible, that kind of stuff. That is one way to do it. You can also get some sort of personal funding, line of credit, HELOCs, refis, all sorts. You can go to Lending Tree. You can borrow money there. Those are all the great ways to do it. There's a bunch of peer-to-peer lending platforms. If you have good credit, if you can show income, all that good stuff, right? Typical loan type stuff. You cannot get a bank. You know, if you went to a bank, you have to get a personal guarantee or a personal loan. You can't just say, hey, you know, I need money for tax sales. They're gonna say, no, we're gonna give you a personal loan. So a little bit more careful on what they lend money, that kind of stuff. So try the peer-to-peer lending platforms. It's a great way to start if you have decent credit. If you have bad credit, bad income, don't have to go through all that stuff, my suggestion is to find a partner. The best way to start if you're brand new is going to be friends and family. Reach out to your sphere of influence. Hopefully you have not burned your friends or family in the past. Otherwise, you're not going to get any money, I don't imagine. But listen to your sphere of influence. Talk to them. Say, what do I need to do to help you invest me? I'll do all the work, and I'll give you 75% of the profits or whatever it is. But be ready to show them the numbers. Be ready to give them, you know, proof that, you know, this works. Like, this is the max bid and this is what I'll sell it for. Here's the comps. Here's what I'm buying, all that good stuff. Your sphere of influence is a great way to do it. Outside of that, once you do have a proven track record, you can meet up with financial planners. You can meet up with mortgage brokers and stuff like that, and consider getting some creative funding options and that kind of stuff. Really work it. If you hear no 100 times, keep going until you hear no 1,000 times. Somebody eventually will want to partner with you, and they'll be happy that they did. They'll be thankful that they did it, as long as you provide them a return on their money and you're successful. And guys, I always say, if you have anything with families, anything with friends, anything like that, put it in writing. The best way to ruin a family, the best way to ruin a relationship with anybody is for them to think that you owe them money that you don't owe them, or vice versa, okay? So anytime, put it in writing. And I always say, listen, I trust you, you trust me, we're shaking hands, all that good stuff. But here's this, just in case I die, just in case, you know, I disappear or something, you know, here's our agreement. Put everything in writing. You know, just because you don't want any questions later on. So, okay, hopefully that helped you. But yeah, you might have to be very, very creative. You can't just go to the bank and get it unless you do like a personal loan. But be creative. Keep asking until somebody says yes. In the meantime, maybe you save up a few dollars and start small, and, you know, get a proven track record, and then go from there. And then the more success you have, the more people want to invest with you. Guys, I get email like all the time from people wanting to invest and like split profits and stuff like that. I don't do that, but like the more success you have, I promise, in tax law investing, the more you know, the more people want to invest money with you. Let's see. Ben says, perfect. Do you offer surplus funds? Great question, Ben. I do not. It's really not my forte. I've looked into it in the past. I've done it. I did it a long time ago. I didn't have a whole lot of success with it. So basically, what Ben's saying is, if there's $10,000 that is owed on a piece of property, and the property sells for $18,000, there's an excess there of $8,000. That's above beyond and above what is owed. Now, in most states, that money will first go to any lien holders against that property. First, going to go to the government, then any lien holders, and the government liens and stuff like that. Then any lien holders, mortgage companies, that kind of stuff, and then the owner will get what's left over. There are a lot of people that will help the owner. They'll send them an email or a letter. They'll track them down somehow and say, listen, I'm going to partner with you. I'm going to help you get this money back, and in exchange, I get a certain percentage of it. There's a lot of people that do that. I personally don't know how much success it might be worth, investing a few $100, sending some postcards out, looking into that kind of stuff. There are some states that are not allowing it anymore because there's some people selling it as like get rich quick type stuff. Some states say, listen, the max finder's fee you can do is $50 or something like that. I've seen some stuff about it. I haven't done it myself, so I don't look into it too much. But I mean, like everything, it could be successful for you. You could make some money if you take the right avenue. Again, I don't do it. I tried it a number of years ago, but I haven't done it lately, so I really can't help you too much there. Let's see, Jermone Carter, self-directed IRA that owns an LLC for investing equals a tax-sheltered LLC. Yeah, absolutely. So basically, when you buy, I think. Let me expand on that a little bit. So basically, when you buy real estate, most financial advisors, most financial planners are going to say, if you want to invest in real estate with an IRA, you need a self-directed IRA. And if you've ever invested in real estate with a self-directed IRA, it's like, it can be an absolute nightmare because what happens is you're just the guy that sends stuff off. They sign the papers, they do everything. So as far as like buying a tax lien or a tax deed at an auction with a self-directed, a standard self-directed IRA that most financial planners use and want, that are familiar with, it's nearly impossible. You have to send all the paperwork off to them. They wire the funds. Like, you don't do that at tax deed sales and tax lien sales. It does not work like that. So you have to have an IRA LLC because you need what's called checkbook control. You don't own, the IRA owns that LLC because it's a qualifying business. It's a qualifying investment, a business is, which is the LLC. So you need checkbook control. Find a financial planner, find a CPA that's familiar with it and knows what an IRA LLC is with checkbook control. You want to have the ability to sign that check is basically what you want. You don't want them to sign a check because you'll never be able to invest in tax sales. Obviously you can invest in typical real estate, but IRA LLCs are the way to go as far as investing in tax liens and tax deeds. A little bit more complicated than just a standard SEP IRA, but check with your financial planner for more information. I'm not a CPA, not a financial planner, so that's about all the advice I can give on that. Cool, awesome channel, cool. Thanks guys, I think that's about it. That's all the questions that I've got. We're about at 15 minutes. Jermone, last question guys. How much capital do you think it would be great to starting either in deeds or liens? It really depends on where you're at. I've seen some deeds, some liens go for like a few $100. If you have $1,000, $2,000, $3,000, $4,000, you can make it work. If you have $10,000, you can definitely make it work. But I've seen people that literally started with $500. Like the guy I was talking about earlier from Hong Kong, the little lots that he bought, I think he said he's paid $600 and $800 for or something. And he's already got them flipped and he's making a few bucks on them. I think he said he doubled his money or something. It's like, so you're not going to turn $500,000 into $1 million overnight or anything, but you can definitely start small. Obviously, the less money you have, the less options you have. You need to look around some more. Look for the property. Look for the areas. Look at the results where you can look through all the results, and you got a few $100 here, maybe $1,000 here, that kind of stuff. You can definitely start small. The more money, of course, that you have, the more options you have. But if you only have so much money, you only have so much money. So that's going to limit what you can buy. So start small. Look at a number of different areas. Don't just focus on one area and say, oh, I got $1,000. I can't buy anything in there because nothing sells for $1,000. So go to another county and another county and another county. Then if you have to, go to another state, because I can assure you at some point you're going to come across something. Just don't give up. And in the meantime, keep accumulating some money, keep piling some money away. That way, when the opportunity does arise, you'll be able to take full advantage of it. Guys, I think that is about it. We're at 53 minutes here. Guys, if you if you have any questions at all, you're more than welcome to find some videos here on YouTube, submit them underneath the questions, and I respond to just about everybody that every question that I see, unless it somehow gets buried. But if you're looking at a video, you have a question, submit that question. I'll definitely respond to you. Always, guys, Tax Sale Playbook, another plug for this, just because it's a great way to start. 2 last questions, guys, and then we're going to close it down. Jermone, should we start with liens or deeds first for newcomers? If you have a lot of money, want a little bit of work, and want to make a little bit of money, liens are good. Great interest rates, going to beat the market every single time. If you want to flip your money to really grow it, if you're starting with something small, like a little bit of money, I would say deeds, because you can flip the deeds faster, and it's going to require more work, more effort, that kind of stuff. So if you want to roll your money over more and more, do deeds. If you're looking for something a little bit more passive, do liens. So it just kind of depends on how much money you got, that kind of stuff. So the last question I've got is, what is your current rate of ROI from tax liens and from tax deeds? Great question. Tax liens, I have to look and see. Usually I do like an year-end report, and I have not done a report lately. I would say it's, depending on the state, the size of the lien, all that good stuff, anywhere from probably 6 to 13, 14%. Somewhere around there. Maybe the more risky stuff's on the higher end, the safer stuff's on the lower end. Tax deeds, gosh, I know that averaged out throughout my entire career, it's almost close to 200%, almost doubling my money every single time. Now, again, that's not turning $500,000 into $1 million. That's turning 5,000 into 10,000, 2,000 into 4,000, 10 into 20, that kind of stuff, right? So you're not, those numbers, as you go up that scale, those numbers don't stay the same. I can promise you that, right? If you buy a house or you buy a piece of property for $100,000, you're probably not going to get $200,000 every single day. So that, the number goes down as you go up the value ladder. But yeah, so hopefully that kind of give you an idea. I'll have to run the numbers and see. They kind of vary. Hey, as long as I'm making some money and I can teach you guys, I'm very, very happy. All right, guys, I think that's it. I'm gonna wrap up everything today. If you have any questions, again, if you see a video, leave it under the video. That's probably the best way to get a hold of me. You can also go to taxsaleacademy.com, grab this book. If you want more comprehensive training, more information like this right here, want to be able to interact with me nonstop all the time, join the Tax Sale Academy, taxsaleacademy.com, click on the join button. And if you're interested in that 6-month starter package like I was mentioning earlier, go to taxsaleinvesting.com or taxsaleacademy.com and click on the web class. Go through the web class. Guys, before you join the Academy, again, make sure you like me. If you don't like me, you don't want to sit there and listen to me teach you nonstop. But truthfully, guys, the most fulfilling thing in my life, I've been in the tax business for 16 years now. I was on a interview for podcast the other good day, and the guy's like, why do you do it? Why do you teach people how to invest in tax deeds and tax liens? Why not just do it yourself? Well, here's the deal. I really, really enjoy waking up and not only be able to do what I love as like investing in real estate. Like I've always done that, investing in tax deeds, tax lien, absolutely love it. But when I wake up and I get an email and it says, I bought my first property, or, I made this much money, or just something that says, hey, thank you, I appreciate that, or I didn't know that, or you taught me something, like there's no feeling like that in the world. It's just so fulfilling that I'm able to help people out, guys. So as always, if you have any questions whatsoever, feel free to leave them under the videos. And then of course, if you want more training, head on over to taxsaleacademy.com. Again, that's taxsaleacademy.com. Hey guys, enjoy your Friday afternoon. Have a wonderful weekend. I will see you next week for probably another live Q&A. Check your email and take care, folks. Bye-bye.